One reason stocks ended the year on a high note was all that additional stimulus from the Federal Reserve, commonly called QE2. Former Fed Governor Rick Mishkin initially viewed the bond buying program skeptically. Mishkin, who's a professor at the Columbia Business School, joins us this morning from his home in Irvington, New York. As well, our economics editor McKee is here to weigh in on some of the big issues on the economy. Professor Mishkin, you last joined us before officially QE2 was announced. I know you viewed the program skeptically, but let's get your update on the economy since that announcement over the last couple of months. What's been your take on what's been happening in the jobs market, in the housing market, with manufacturing? What can you tell us?
Well, clearly what's happened is that the economy is on a much more sustainable path to recovery, and that's a very good thing. We still have to recognize, however, that we're in a situation with two issues that are relevant to the Federal Reserve, which is, first of all, that the economy has a tremendous amount of slack. Unemployment is still near 10%, and even though the recovery now looks like it's on a sustained basis and that we're no longer worried about a double-dip recession, we're going to have a lot of slack in the economy for a very long time. The second issue is that inflation is very low. So the underlying inflation, trend inflation, is around 1%, which is well below a goal of around 2%, which is what almost everybody agrees on in the Federal Reserve is a good number, and most economists agree on. So we still have an economy that's subpar, even though the good news is that the economy is on a sustained recovery.
We're back with Rick Mishkin, former member of the Fed's Board of Governors and a professor at the Columbia Business School. Professor Mishkin, before the break, you highlighted the pros and the cons for the economy right now. What does this mean for future potential bond buying by the Fed? They're busy with that program, but we know Ben Bernanke said on 60 Minutes recently that something like QE3 would not be out of the question. In your opinion, how far would the Fed be willing to go as far as more asset purchases?
Well, I think the first thing I think that's important to recognize is that the need for expansionary monetary policy is there because of this huge slack in the economy and also the fact that we have inflation that's too low. However, the economy is now on a much stronger basis, and I think it's also important to recognize that there really are some important downsides to QE2 and to quantitative easing, in that it expands the Fed's balance sheet and poses more risk to the Fed's balance sheet, and that could create some problems if, in fact, there are losses in the Fed balance sheet in the future, and that could be something that could weaken the Fed's independence. And that's important right now because the Fed has been under unprecedented attack, and in fact, it could even get worse. So I think that's very important. And the second issue is that the Federal Reserve purchasing these long-term bonds does create a perception and a fear that the Fed is so-called monetizing the debt. It's actually accommodating the irresponsibility of fiscal authorities who have not yet gotten serious about long-term fiscal sustainability. So those are serious costs to a quantitative easing program. And that's one of the reasons that I think that the fact that the economy is actually stronger right now makes it much less likely that we're going to see a QE3. The Fed is committed to a $600 billion program. They are, in my view, are going to go through with that program, even with a stronger economy, because there's actually still a need for expansionary monetary policy. But the cost side of having quantitative easing is such that more quantitative easing than is already planned is, I think, very unlikely unless the economy really goes into a huge downshift. And right at this point, that's much less likely.
Well, Rick, what do you expect from inflation? If the economy grows faster, we're going to see unemployment come down a little bit, which is one of their goals. But are we going to see inflation rise in 2011?
Well, I think that we certainly might see it stabilize, that inflation expectations have stayed very well grounded, around 2%. So inflation may rise a little bit, but on the other hand, that's a good thing, not a bad thing. Inflation is too low. Is there an inflation problem? I don't see it. We don't see big inflationary pressures. The slack in the economy is something that's constraining inflation. So that the need to worry about inflation, I think, from point of view of where the economy is not very high. The big wild card in all of this is the fiscal problems and the federal deficit. That we have not yet seen. This is actually a bipartisan affair. There is bipartisanship in Congress. Where is it? Well, both parties have not been responsible yet and serious about getting the fiscal situation under control. If that continues and is a view that it will not get fixed, which I hope is not the case, that could actually cause people to start getting concerned about inflation inflation expectations could rise, and that could lead to higher inflation.
Right.
I don't think that's going to be the outcome, but we sure should worry about it.
Before we go, as you highlighted, we've seen an unusual amount of commentary coming from lawmakers questioning what the Fed is doing right now. What are the ramifications of that? How has the Fed been handling that criticism, and are there any implications for the Fed?
Yeah, my problem, I think that it is a huge problem for the Federal Reserve. One of the reasons why I think the Federal Reserve is in this box right now is because they have no long-run strategy in place to describe how they're using quantitative easing. I was hoping the Federal Reserve was going to move in this direction, make it much clearer what its inflation goal was, and also I think make it much clearer as to how it's going to shrink down the Federal Reserve balance sheet when it becomes necessary. I don't think that's been sufficiently dealt with by the Federal Reserve in a way that convinces the public, the markets, and the politicians. And I think that's something that they really have to think very, very hard about. Because just saying that we can do it, technically it's not a problem shrinking the balance sheet, but what is the process that they're going to use to do so, and how does that fit in with the objectives of the Fed and the long-run objectives is absolutely critical for them to discuss at this stage, and I hope that that's what will happen in the future. They do have a subcommittee on communications. Maybe we'll get an outcome in that direction, but so far, they haven't done what they need to do.
First week of the year, Ben Bernanke goes up to Capitol Hill to explain himself. With Ron Paul now running the subcommittee on the House side that oversees the Fed, more people beating up on the Fed. Are we going to see any reaction at the central bank to this kind of political pressure?
Well, I think I will tell you it's going to be a lot more entertaining. And I don't mean that in a good way. Ron Paul is somebody who has a book called End the Fed, and would like to return us to the good old days of the gold standard. When you really study the gold standard much more carefully, there were no good old days. The Fed's going to come under a lot of criticism from that subcommittee and elsewhere. And the issue, however, is the Fed will not cave into political pressure at this stage. That is not something that I'm particularly concerned about. I do worry very much about the longer-term issues, but one of the things that's important is that the Fed will continue with its policies, will continue with QE2, because it's not going to sit there and say, just because we're getting criticism, that we're going to cave in. That would make us look even weaker. And that's not something the Fed is going to want to do. It already has enough problems without looking like it's giving in to political rhetoric that it disagrees with.
All right, Professor Mishkin, thanks very much for your time. That was former Fed Governor and Columbia University Professor Rick Mishkin.